Welcome to Peak Oil News for September 5th, 2022. In our first story, recession fears and more lockdowns in China have led to lowered U.S. rig counts for local crude extraction in the United States. Oil rigs fell by 9 to 596 last week. Most of this drop occurred in the Permian Basin, but rig counts still remain substantially higher than they were this time last year. U.S. oil production is showing a slight downtrend in general for the month of August, beginning in the month by producing 12,200,000 barrels per day and ending the month at 12,100,000 barrels per day. Crude inventories remained low at 6% below their 5-year weekly average. High demand for natural gas, however, has helped to lead to the opposite trend in natural gas rigs, as they increased by 4 over the last week. In our second story, governments across the globe that subsidize their energy prices to help keep domestic prices low are seeing their budgets take a hit from sustained higher global prices. In Mexico, where domestic natural gas prices are set by the government instead of the free market, the government is seeing its coffers depleted to the tune of $3.6 billion. Despite the higher price tag for the natural gas that is the base material for generating electricity, AMLO, the Mexican president, has refused to pass on higher prices to the consumer. Natural gas supplies about 60% of Mexico's electricity. A similar phenomenon in Indonesia has forced the government to throw in the towel and raise prices. Prices for subsidized fuel went up from 7,650 rupiah to 10,000 rupiah per liter for gas, a 30% increase. This has happened after increasing global fuel prices forced the government to triple its budget for fuel subsidies to $34 billion. It is likely that other governments that rely on heavy subsidies to control domestic fuel prices will enter into similar problems if oil prices continue their upward trend. This will likely force governments to end or rein in subsidies or continue to balloon their budgets and make cuts in other government services. And for our third story, key oil-producing countries in the Levant have had several developments that are likely to have profound effects on oil markets. Fighting broke out in Iraq in late August, with 30 people being killed in Baghdad. As for now, at least, a full civil war has been averted, but if civil strife continues, it is likely to jeopardize Iraq's oil production of 4.1 million barrels per day. And a similar story is also taking place in Libya, where the fragile peace seems to be breaking apart as fighting in the capital also occurred last week and may escalate into full civil war. On the brighter side, analysts state that Iran could be contributing up to 4 million barrels per day if all goes well with the Iranian nuclear deal. A phenomenon that, if all else remains stable, could help lower oil prices further. However, this is still far from certain. Social stability isn't just eroding in the Middle East, but also in Europe. Just this weekend, over 70,000 people protested in Prague. Social stability isn't just eroding in the Middle East, but also in Europe. Just this weekend, over 70,000 people protested in Prague, demanding that their governments take a neutral stance towards the war in Ukraine so that energy from Russia will not continue to get choked off. And that's it for today, folks. Thanks for watching. See you soon.